This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Welcome to this video on Bitcoin, where we'll take a deep dive into what Bitcoin is, how it works, and why it's so significant in today's financial world. First off, what exactly is Bitcoin? Bitcoin is a decentralized digital currency network, meaning no government or bank controls it. It was created in 2008 by an anonymous person or group under the name Satoshi Nakamoto. Now, unlike traditional money, Bitcoin allows people to send and receive funds directly without the need for a middleman. Transactions are powered by blockchain technology, which ensures transparency and security. Now, why does Bitcoin matter? Bitcoin offers financial freedom by removing the need for intermediaries like banks. It's often seen as a hedge against inflation because there will only ever be 21 million Bitcoins in existence, making it a deflationary asset. It allows for quick cross-border transactions without the fees or delays typically associated with traditional banking systems. For people in countries with unstable economies, Bitcoin provides a decentralized way to store value and conduct transactions. Finally, how does Bitcoin compare to traditional currency in the fiat world? Well, the main difference is that Bitcoin is decentralized. No central authority controls it, unlike fiat currencies, which are managed by governments and central banks. Fiat currencies can be printed endlessly, leading to inflation, while Bitcoin has a capped supply of 21 million, making it deflationary. Additionally, Bitcoin transactions happen peer-to-peer, cutting out intermediaries, unlike traditional currencies, which require banks or other third parties to facilitate payments. Now, mining is the process where Bitcoin transactions are verified and added to the blockchain. Miners compete to solve complex mathematical problems, a process called proof of work. Once they solve it, they secure the transaction using hash functions, which add an extra layer of protection to the block. In return, miners receive Bitcoin as a reward for their efforts. This is called a block reward. The process is essential for maintaining the network's security and ensuring the integrity of Bitcoin transactions. To list out, what are the top 10 monetary characteristics that differentiate between what is Bitcoin versus gold? In terms of scarcity, Bitcoin has indeed a fixed supply of 21 million coins. It truly makes it absolutely scarce, which in contrast with gold, yes, supply is unlimited and it's unpredictable in terms of how much more it can produce in the future. So for this very reason, I rank Bitcoin as the winner. In terms of hardness, Bitcoin is hard to produce and becomes harder indeed every 4 years as it goes through its halving process. Whereas with gold, hard to produce but not increasing in difficulty. In terms of liquidity, the amount of these units of Bitcoin and gold that's out there for people to trade with, it's fair to say that Bitcoin is growing rapidly, whereas gold has a much larger market capitalization and more established liquidity because it's been out there for 5,000 years, whereas Bitcoin is only 15 years. So at this moment in time, gold is the winner. In terms of portability, Bitcoin is easily transferable globally in minutes, low in fees, whereas gold, it's heavy, difficult and expensive to transport. Bitcoin is verifiable through simple mathematics, whereas gold verification is slow, very costly and requires trust in third parties. So Bitcoin is the winner. Bitcoin has a public transportation history, but it is pseudonymous, whereas with gold, there's no transaction history and can be melted to remove any traces. So in terms of privacy, gold is the winner, at least for now. Durability, Bitcoin being digital and decentralized and robust, but needs technology, whereas gold is indestructible and doesn't corrode over time. So gold is the winner. Bitcoin is highly divisible into tiny units of Bitcoin, known as Satoshis, whereas gold is inconvenient for small transactions. Bitcoin is winner. In scalability, Bitcoin can process limited transactions on the base layer,
with layer 2 solutions coming out into the market, like the Lightning Network, to make it scale. Whereas gold requires third parties to function at scale. So Bitcoin is the resounding winner. And lastly, recognition. Given that Bitcoin is much newer technology and still gaining prominence and recognition in the marketplace, because it's only 15 years, gold is the winner, right? Because it's widely recognized by all the nation states with its 5,000-year history. At least for now, gold is the winner.
That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.